You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. This is training. This is something you will research and make sure that it fits you. So please take notes. Rick Sadler of Hit and Run Candlesticks. He is a swing trader focusing on price action, chart patterns, candlesticks, signals, and trade management. Do you want me to use the bio you sent me?
Well, that or we can just get right into it.
No, do you
Well,
remember what? Do you remember what you sent me?
it just occurred to me what I sent you.
He mainly uses.
Maybe some of that was for you.
He mainly uses the daily chart, but tends to be a shorter term swing trader. Rick strictly trades stocks and monthly directional options and buying calls and puts. His primary focus is on charts and how each trade is planned and managed. HRC is therefore more appropriate for someone who trades stocks, ETFs, and simple directional options, buying puts and calls on a swing basis, the 1 to 5 day average. So sound off in the questions box and let us know who in here is trading stocks, ETFs, and simple directional options. And he'll be able to see it as soon as I change a couple of settings. Rick is known for his RBB, rounded bottom breakout, pinball, and 3/8 trap straight trades using his T-line and Trendicator indicators. And today, I think you're using the Trendicator for pullbacks and breakouts and using trade alerts. So
yeah.
I sincerely appreciate you coming in, even on such short notice. I probably have to apologize to Donna because I may have threatened her. I don't know.
No. It's perfectly fine. Thank you so much for having me. Yes.
All right,
and thanks for not reading all that bio.
I think when we get done, I'm going to. But I'm going to make you the organizer in case you want to see the questions. So it's going to knock your microphone out for a couple seconds. So just bear with me for a second. 1, 2, 3, 4, 5, and you're back. I'm going to mute myself and you take it away.
All right, let me share a screen here. Figure out how to do that. Let's see. Stop showing. There we go. Or maybe there. Show my screen. That's what I want to do. Now, which one? There we go, folks. You should have a screen up. You should see the SPY. Hello, everybody. Thank you so very much for coming here. Thanks for coming to the show today, the last couple days. And I'm going to go through. I want to break things down a little. Keep it very simple, very straightforward. I want to share with you how I look for a trade, how I decide if I want to make that trade. I feel that my charts are very easy. They're very simple. I feel my approach to trading is very simple. But please do not think that, one, if you're struggling in trading, and two, if you've just started trading, don't confuse simple for me or somebody that's been doing it for 30 plus years, just as before me, Adrian, he's got almost 30 years in it. Don't confuse simple with something you can just do, okay? There is a lot of years built into what I do, and sometimes there's just things over time, and you can't put it in a ebook. You can't put everything in an ebook. It would be impossible. It would be so thick and you'd never finish it. So sometimes it's just time. So please I am going to break my chart down. You will see it's the most simplest thing in the world. It's the most simplest thing in the world on how I look for trades. But again, don't confuse that with making trading so simple, okay? So here we go. Um, I want to let me share this first. A couple of things. Here's some trades that I've recently taken off, and when I say recently, down here in the bottom, these may be a month old. Down here at the top, these are very recent, like UAL. The two UAL trades were today. Uh, SCHW yesterday, the part of UAL yesterday, KRE yesterday. But these are some of the trades here. And before anyone asks, do you ever show your losses? Yes, I do, to members only. That is a benefit of membership. And yes, I do have my share of losses, believe me. Um, so before anyone asks that, they are shared, but those are shared to members only. Members are trial members only. So we're gonna let's start. Let's start here, okay? Let's pick a chart. I'm going to pick this chart and I'm going to show you how I'm going to find this chart. And I use this tool here. It's called, we call it LTA for short, but it's called Live Trading Alerts, is the full name of it. Um, and I see that WKHS has come up on the screen. Now I have, you can see right here, 1750 trap. That tells me this is my 1750 trap. I will explain that in a moment. But we'll take a look at this trade now that it has come to my attention. Okay, so WKS has come to my attention. So what I'm going to do over here is actually I could double click this right here and it'll just come up. Now, while WKS has come to my attention, what I'm looking for are charts that for this particular strategy, you see the red dot right in here, the red dot's right there. The blue line, dash line, that's just the 10-day linear regression of those red dots. That's all that is. So what I'm looking for is this strategy where we're in a downtrend and just a reversal, a short-term reversal trade is all it is. But I'm looking for that reversal back up. And my target in this case is going to be the 50-period moving average. Now, when I said this case, every chart is the exact same way. I could come over here and you can see ZH and my target would be the 50. Now, take ZH here. I'm not going to take that trade because we're too close. So if I wanted to adjust this alert to eliminate these, I could, but I choose purposely not to, okay? So let's go back to this WKHS. This is our 1750 trade setup. The 17 represents the 17 exponential moving average. So all I'm looking for is a trade from here to here. That's it, that's all. And at 11%, that's not too bad. Now, this is a 90-cent stock. I don't trade this. This is not something that I'm actually going to trade because of that price. But I'm not going to cherry pick these. I'm going to take them right from the top, and we'll look at some others that I just might trade. So what I'm looking for is, let's go to this chart now, okay? And here's where the simplicity really starts. This chart right here, that chart right there. And what I'm looking for is this. I'm looking for this trade to be a bullish trade. So what I'm looking at is this turn right through there. I'm looking for that turn. Now, I'm not particularly looking to trade right there at the turn. I prefer to trade when we've actually turned green. Now, this has not turned green over here, so I'm just watch listing it. It's not really prime time for me. Prime time is when that dot right here actually turns green just like that. And that's what I'm looking for. And then I'm going to follow that trend for the most part. In theory, I'm going to follow that trend. But I know me, and I know that, um, here we go. I know that I will probably take profits off as we move up. So I'm going to trade within that trend. So I want this to start just like this, but this never became a trend because the white line never jumped over what we call the trendicator. That's what the red and green dots are, as a trendicator. We never did go over that. And just like this, we're not over this. So it's not prime time yet, but it's getting close. So you can see how simple it is. And if I turn somebody off with a 90-cent chart, don't worry about the price. Sometimes I'll look at, we're going to look at more expensive charts. For those that can't trade more expensive charts, don't get turned off by those. We're looking at the chart, the mechanics of a chart. And it doesn't matter whether it's a $500 chart or whether it's a 90-cent chart. The mechanics of the chart is absolutely the same. So I'm going to wait for that white line to flip over, and then that will be prime time right in there, just like that. Okay. Very simple, very easy to do. Here, let's go. Here's ICPT. Let's take a look at this. Whoops. What did I just do? I need to change this back just a second. Didn't mean to do that over there. Let's look at ICPT. There we go. See how that's green and that's red? Be long, be short. Be long, be short. One of the things I would like to accomplish today is break this down to very simple, no complication, none. And I just don't see how that is complication. If anybody agrees, just type agree. If you disagree, type disagree. It's okay. It's your money. It's my money, and that's cool. So, you see how we've started that turn? Well, this just might get my interest right in here. Now, to take my interest higher, I'm going to need to go look at the chart. So now let's go look at the chart. See how our dot's green? See how price is over that? That's what I'm looking for. And by the way, well, let me just take it from here. My stop will be if that dot turned green. So my trade, I'm looking for the next major moving average. I trade with moving averages an awful lot. So that's what I'm going to do. So now what I'm going to put in here is what I call a buy box. And I'm going to put it right there on the trendicator. And up to the 50, we'll just call it 23%. Now, I suspect for most traders, that's a pretty good amount. I would be surprised if a trader said, hey, 23% is not enough for me. And that's just the stock. If I trade the option, that's going to be closer to jeepers creepers, 40% or more, 50%, 60. That's good money right there. That's a nice trade. How hard is that? How simple is that? Well, there are ways that you can make it difficult if you want. And I want to go back to my opening statement. What seems simple and easy for somebody that's been trading over 30 years is not quite as simple and as easy for somebody that just started or somebody that's struggling. For those that are struggling, I don't care if you've been trading for 150 years. If you're struggling, you're struggling. So you might as well be a rookie trader. And there are things in this market, and this is what I'm trying to caution on. This has been my thing lately, even in our trading room. I've really been hammering this lately that just because you wake up one day and you want to be a trader, you're going to have to pay your dues. You're going to have to learn how to trade. We, like everybody else, you have a trial or a grace period or something. And if you are thinking you're going to become a trader, a successful trader in that period of time, well, as polite as I can put it, you're dreaming. If you are going to um, learn all of our little nuances, our chart patterns, things like that, well, then you're right. You could do that. And by all means, do that. I mean, you're in there, take advantage. We want you to learn that stuff. So does everybody else. Um, let me talk now a little bit about that stuff that comes with time in trading, with a little experience. And that's how to read the market. You know, if I look at the SPY here, I think that's a beautiful bullish chart, extraordinarily bullish. Does that guarantee we're going to go up? Absolutely not. Does not at all. If I shrink this up a little bit, I can see there's a little bit of resistance right over here at about 340.70, and then right through here. These are my next two targets, by the way, 37.90 maybe. My next two upside targets for the SPY. A little side note, resistance is a target and targets are resistance. I'm not sure if anyone knew that or thought of it that way, but jot that down and think about that when you sit back tonight in your easy chair. Just think about that. Resistance is targets, targets are resistance. Okay, so we went over one little one one trade setup here, and that's how I found it. Let's look at a few more. Um, And here we'll look at something a little different. And let me make sure this stays on top. Yep. So this is our rounded bottom breakout setup is what this is. And this is where the scanner stopped today when the market closed. Key. So I'm going to share with you key. Now we were in key and we did close it out yesterday. And that was a 42% trade on key, was an option trade. And this was a trade that this was the strategy I just showed you from this area here up to the 50 is what we did. I think I held it just, a little longer. We went through the 50 and I held it there. So bought it here and then closed it up here. It's still bullish to me. It looks good and I very well may get back in it. So let's go back to the beginning and let's go to this chart. Let's start here always. Is this chart trending? Please don't answer that. Let me stop for a second. Trending is sort of up to you. There's not a trend master out there that will whack your knuckles if you're not following their trend. This is one of the things that I think is kind of misplaced in charting, is that everybody wants to follow that exact trend right there, like that, and that's gospel right there, and everybody's going to do that. It doesn't have to be, okay? You make your own trend. There is no law that it says it has to be this. In fact, you'll find most of the time I don't use straight, hard lines. Now, I do sometimes, especially when I'm doing, well, just sharing charts in the room, I guess. Sometimes I'll do that. But overall, what I'm going to look for is this right here. And these are just two moving averages. But I'm looking for that red turning green, the white line rolling up through here. Pretty easy to do. Key is giving us an alert for a rounded bottom breakout. I'll show you that, but the early stages where I bought this is looking good. You can see how we rolled up here and then rolled down. What a beautiful chart. My favorite chart in the world is this chart right there. And that is that right there. There it is. That's my favorite chart setup in the world. And there it is right there. And you can see it without looking at price. We don't want to look at price just yet. All we want to do is establish, is this even trending? Adrian was before me, and I was listening in because I was here a little early. And I heard him say that the trend is your friend. Amen, Adrian. Um, I think he's made some kind of, joke about it. I can't remember exactly what it was. Um, you know, um, don't take the trend lightly or something. Uh, Two thumbs up. I 110% agree. Trade the trend and nothing but the trend. That just, and if you take nothing away from this entire show that um, uh, in, that Sherry's got going on here, take that away. The trend is your friend. What the trend is what you call a trend, because you might be looking at a different time frame. You might be a weekly trader, you might be a monthly trader, you might be looking at a 5 minute chart, so you have to create what you think is a trend. And what I think is a trend is my trading trend are these green and red dots. My trading trend has now turned green. So I want to maybe enter this trade. Not only that, the white line, which is nothing more than the 8 exponential moving average, and we call that the T line, has crossed up. All right, let's go back to the chart. We've established this is a good chart. So you can see right in here why I might have bought this the other day, and I closed it because, well, what was it? 50 key, yeah, 53.85%. Why did I close it? For 53.85% reasons. That's why. Can it go higher? Of course it can, but I'm a profit taker, so I took my profits. I will reconsider an entry. In fact, rounded bottom breakout setup. Now, this is a completely different strategy. And we're looking at that in this area right here. And we're there right now. So I'm going to consider looking for a buy in here, um, maybe next week. I know it won't be tomorrow because I don't plan on being here tomorrow. But if it moves up without me, it moves up without me. If it pulls back and then comes up, good for me. But that's what I'm going to be looking for, something in this area, because it has met my rule. What's my rule? Um, I forgot how to get there. We have turned green. We have gone from bearish to bullish. So I'm willing to place that trade. Now I'm going to follow price. Um, I'm going to wait for um, my I I'm something we call a 3/8 trap is a fantastic entry, and that's what I'm going to wait for. And it's going to need to settle down a little bit. It's going to need to walk sideways just a little bit, allow the T line to catch up. That's the 8 black line there, catch up a little bit. That's not complicated. That's a little bit visual. That's it. That's all it is. Pretty simple. And from there, I will trade that and take profits off as it moves up, recognizing that we're, in a resistance area up here or a target area. Because remember, resistance is targets and targets is resistance, always, always. So there's a very simple setup right there. Very, very, very simple. Um, Sono, actually, I just noticed um, that's coming up for that 1750 trap. Again, this is how I find the charts. Okay, let's make sure it stays on top. This is how I find the charts. Now let me get rid of all of that. There we go. Now I want to, now in all honesty, I don't go look at this chart every trade. I'm doing this for your benefit, just to show you how simple it is. And this chart is much more um, visual just by itself. No candlesticks, nothing, no price action, nothing to sway you from are we starting to trend. That's all this chart is, and that's all I want to know at this level. It's starting to trend. So now let's come over here. Now I can take this chart and now I can look at price action. I can look at this chart and say things like this. Oh, hey, look, double bottom. That means something to me. I don't know about you, but it does to me. I can look at this and say, oh, look, it's kind of it is still a bullish W pattern, just sort of stretched out here. A bullish W pattern that we've broken out of. Now, I don't know about you, but that means a lot to me. It's very, very visual. Everything I do is visual, extremely visual. So I've got a bullish bottom setting up. Our dots have gone from red to green. How easy is that? We're starting to walk sideways. And by the way, I think that is a positive thing. Can we make any money in it? Because you know that my target's going to be up here. So let's just see. That's a 10% trade. I'm guessing somebody would like to have a 10% trade. I don't know. I don't know if you would like to have a 10% trade. Can this go higher? Of course it can, but that becomes a completely different trade. Completely different. Let's see here. Now let's take a look at Apple, because I'm at Apple myself right now. Let's take a look at Apple. In fact, yes, let's talk about Apple, because this was a discussion in the trading room right before I came on here, because I bought Apple yesterday, and there was the whole discussion was I bought Apple yesterday. Somebody bought Apple yesterday. They were stopped out, and I was not. So the question was, well, where's your stop? Why didn't you get stopped out? Well, let's go back to here. That's what I'm trading. The trend. I'm trading the trend. That's a bullish trend. I don't care what price does in here. I mean, let me leave me a little door to sneak out of on that statement, okay? Right now, I don't care what price. That's what I should have said. Right now, looking at this chart, I don't care what price is doing. I see a beautiful trend. How tough is that? There you go. You can see Apple bearish, be bullish, be bearish. Yeah, bullish, bearish, choppy. Be bearish, be bullish. Be bearish, be bullish. How easy? Keep trading simple. You don't have to complicate it. It doesn't have to have all kinds of other charts to look at. You don't need all kinds of indicators. This is what you see is what I use. I don't use any other indicators, okay? I really, really don't. I follow the trend and trade price. It's not hard. Pretty simple. So let's now that I'm going to assume we all agree that this is a bullish chart. So now let's go look at price. Bullish, by the way, doesn't mean it's a buy. Okay, there's two different things there. A bullish chart doesn't mean it's a buyable chart. Does not mean that. Now let's look at it for a buy. So here we've rallied up. We've got this big bearish engulf. What doesn't a big bearish engulf mean? Well, let me show you what it doesn't mean that I think a lot of folks get a little sideways on. It doesn't mean price is going to come down there. That's not what that means. However, it means there is a really, 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 really good chance it's going to pull back. But where is it going to pull back to? You know, I hear people say, well, support. Support is a figment of everybody's imagination, in my opinion. Support is where buyers buy it. And you can put lines up to your blue in the face wherever you think support might be. But support ain't support till buyers buy it. So, you know, if you were to put a line right here, nothing, this move right here, if we're going to call that support, which I would, nothing says the buyers are going to step in right here. If we were to put a line right here and call that support, which I would, and if we came down there, nothing in the world is going to suggest that buyers, in fact, are going to buy that. Sorry about the dog in the background. Mailman's here. Um, Nothing. Not one stinking thing. You can put lines wherever you want to in a chart, but it does not mean that support until buyers step in. So you can put these lines. I mean, I do it all the time, okay? I put them in to draw my attention to it is what I do, but it doesn't mean that there's support. So back to why was I not stopped out and they were stopped out? And the reason I wasn't stopped out is I'm following that trend. I'm following that trend. The trend is my stop out. If we would have failed the trend, that's a stop. Now there's a problem with that, okay? If you were to buy, say Apple up here at the top, okay? Say where you were to buy Apple up here. Well, if this is your stop, those green dots, the Trendicator, breaking of the trend, well, let's just take a look at that. Let's do it this way. Let me get rid of all that. There we go. If you were to buy up here, and we're going to pull back to this dot, that's a 5.25% loss. Now, there's a lot of people that can't afford that, and there's a lot of people that would be okay. And by the way, that's not where the stop would be, or that may be where the stop would be, but you may get a little lower, I guess, something like that in that area. Nevertheless, you're looking at 5.25% at least. Again, you might not be able to afford that. Well, the simple thing to do is buy closer to the trend line. Easy peasy, right? Yeah. Let me see you go out and do that tomorrow. That is one of the hardest things in the world to do. You will look at thousands and thousands and hundreds and thousands of charts. You'll drive yourself just plumb crazy by the end of the week. Oh, Monday morning, you start off, you're all gangbuster looking for that. Hey, that's one of those hard things to get through, but there's a way to do it. I have my alerts set up to only be 3, or in some cases, depending on the overall chart pattern, 3 to 5% away from the Trendicator. And to be honest, I lean toward the 3% side. So no matter what, I'm trying. I do my best. Sometimes I pay a little bit more, but I do my best to be within 3% of the Trendicator. So you've got a beautiful trending chart. Here we pull back. So let's go back to the original problem, right? This other person was stopped out and I was not. Well, um, I think we looked at it today on what they paid for it, and it was less than 1%, which it was that for me because I bought it about right here. Um, and when we pulled back right in there, it was like 0.79% when we figured it out, where we bought it and where the stop out was. Well, they put their stop right in here, which there's nothing wrong with that, by the way. I'm not trying to say that was wrong. Not at all. Every trader has to have their rules. This is my rule. That was their rule. I stayed in. I'm now bullish. I'm now green. And believe me, their stop was perfectly fine. There's nothing wrong with their stop. For them. For me, maybe so. So can we see how simple this is? Does it make sense on how simple things look here? How simple you can make it look. Take AMD. Now I'm not a bull on AMD yet. However, there we go. Huh? My chart's not changing. Oh, there it is. Okay. However, now try one more time. However, AMD is very bullish, isn't it? It is extremely bullish, I think. Extremely bullish. Now, that doesn't mean that something can't happen overnight and it can be extremely bearish tomorrow. Welcome to trading. It could happen. Believe me, it could happen. But right now, it's bullish. So let's go into the chart and look for an entry now. So I'm looking at this chart, and this is one of those things for all the people struggling and all the people maybe just starting out in trading. There are some things that you're not going to get until you do, and it takes time. It doesn't have to take years. It doesn't even have to take a year. It doesn't even have to take 6 months, but it takes some education. You need to get in there, dig in, get your feet wet a little bit, ask lots of questions of somebody, wherever that somebody might be. Ask lots of questions, learn, share. So I'm looking at this and I'm not ready to go prime time yet on this. I'm not. I think we're in the right place. I think we're getting close. It's a little far from the Trendicator for me. That's one. But see that black line? That's also one of my little indicators that I use. Now, because of the way this chart is setting up, I'm probably not prime time until we break out. Now, I learned long ago that you don't have to buy on the cheap to make money. You don't have to buy it down here to make money. If AMD is going to move up, it's going to move up, and there's plenty of money to be made. So I'm kind of, whoops, my line's a little off. There we go. I'm kind of waiting for this one. Now, it could be that I miss this, and here's why. Because it's sort of at this position where I'm sort of picky about the entry. I don't mind this breakout entry. I recognize this target right up here, which is what? Resistance. Resistance is targets. I recognize that. So I have to wonder, is AMD even worth it in here? And that's something to think about for a trader. It truly is. Um, Another thing too is if this starts moving up, it will break out of our 3-8 trap and it will be running right into that target slash resistance. Well, that's not where I want to buy. I want to buy on a pullback. And I'm going to change the color of this, my marker, that follow that black line up right there. We're clearly too far away from the Trendicator, so I'm going to use the T line for this one. Move up, pull back. I'm going to wait for buyers, and we'll be within 2-3% of the black line. That's my new line right there. Very visual, very easy. But you see the complication of what a little experience will do for you. Somebody just starting out, they hop into this because they hear that Joe Blow bought it. They hop into it and it doesn't work out. It comes back and then you get all ticked off and you blame everybody in the world but yourself. Tough love. It has to be. It's not their fault. It's not the market's fault. It's your fault. You have to know how to trade the chart. So while I love this trend, I'm not 100% sold, 100% sold that AMD is worthy of an entry until maybe it breaks out or it comes up and proves itself right in here. I would take that. The resistance doesn't scare me at all. If it proved itself a little bit to the right in a week or two, I could see that. Now, we could wake up tomorrow morning and AMD could take off. Good for AMD. I'm the rules I have tells me what to do. Okay. Um, BYD. Now, let me find another one. LMND. Okay. And by the way, I didn't make those numbers up. There's BYD right here, and here's LMD right here. This is our trending 3-8 trap. This is how I find these charts. Okay. This is a trending 3-8 trap. So let's go back to this. Is this chart not trending? Absolutely trending. Absolutely. 100%. So now I look at this chart. I'm very, very bullish on this chart. Remember, bullish does not mean it's viable. That's not what bullish means. Those are two different mechanisms. And the first mechanism I want is I want it to be trending. And by the way, we could be talking about bearish too. It's just that the market is bullish right now. But we could be doing the same thing to the bearish side. Bullish chart. Now let's go look at price. So now I'm gonna look at price, I'm gonna look at the chart pattern, and I'm gonna look at how I could enter this. Now this is what we call a 3-8 trap. This is a 3-8 trap. And what that means, it's trapped between the 3 high exponential moving average and the T line. We're trapped right here. So knowing that piece of information, where would I not like this chart? Right here, how about that? Anything below that trend, I might not like that chart. And then I have to evaluate, is that where, do I really want to keep this? Very visual, very easy. What else? What else? What else? What else? What else? Let me see here. Um, let, let, uh, so let's do this. Let's break this down. Let's look at, we'll look at Amazon as an example. Let me get rid of all that. There you go. So number one, is Amazon bullish? The answer must be yes. There is no in that question. That is extremely bullish based on this chart and and only what you see in this chart. So that's number one. Number two, we want to wait for our entry mechanism. Our entry mechanism, my probably number one favorite, is what we call a PBO, which is a pullback opportunity, which you could get it from a 3-8 trap, or one of my other favorites is just below the highest high in the past 5 days. So as an example there, let me just extend that Trendicator and do this. If we were just to mess around down here, move this way, and I should have done it that way. I'm going to use this as the high right there for this conversation anyway. Now, below the highest high in the past 5 days, or a 3-8 trap. So if we were just to bounce around here for a couple of days and all of a sudden we get that buy signal, there's the high. I would buy that in there, right in there, looking for that breakout. Now, there's nothing wrong with somebody waiting for the breakout. The whole point, everybody trying to buy is trying to buy in this area anyway. Very, very simple. And you simply start with the trend, make sure you've got your entry mechanism, and there's other entry mechanisms. We use, like I say, the 3-8 trap, a below the highest high in the 5 days, which essentially is a 3-8 trap. That's it. Close to your trend line, close to your point where you would say, I don't like that chart. Okay. XRT is here. Let's look at XRT. Look at XRT. Beautiful. So you can see that we cleared the green dots right here. The red went from green. That could have been a buy. Look where we are today. Let me share a little tidbit with you. Just a little tidbit with you. If you ever see a chart like this, and I have another chart I want to show you too. And then, by the way, Sherry, I'm going to close this up top of the hour, okay? Just so you know.
Okay. Well,
Yeah.
you don't have to brush.
No, I'm good. I'm good. Yeah, thank you though. Thank you. So if you ever see a chart like this, and you utter the words, boy, I wish I was in that chart down here. That's the chart you want on your watch list, okay? One of the issues I find with when I do private coaching with people, and by the way, the only people that want coaching is people that's struggling, new people that are trying to get a bead on everything, kind of a rush, a heads up, a head start, I guess. Those are the only people that want to do coaching. Somebody that's, an ace trader making money, they don't want to do And here's one of the things that I find with struggling traders just starting out. They're always looking for that. I got to catch it. All right. Is that where it's at? And then it's going to fly? I would suggest let the chart fly. Let it fly. And then be patient and wait. Of course, you have to have a mechanism to alert you. That you do have to have. But rather than trying to catch the flight, let it fly. Now let's go get it. So this rallies up. I'm going to wait for a pullback. And if you don't think it's pulling back, well, you're smoking dope because it will. It may not pull back right here, but it'll pull back the next day or two, and it will give us that entry, assuming the market and everything is still working. Okay. Look at this one, CVNA. Man, everybody was all over this one here. This is one that we were in earlier, and well, right here. We were in. We weren't in it for today. Right there, we sold half for 30%. Where's the other half? The second half for 110%, or $2,000 on 5 contracts. And this was just a few days ago. So for anybody that utters the words, "I wish I was in Carvana," I urge you to put this on your watch list and wait for the setup. And let's look at the possible setups here on what I would look for setup. And let me get my little tool out. Here we go. You see how we rallied up and pulled back? All through there is the entry setup. See how we rallied up, pulled back? There's the entry setup. See how easy that is? And notice the trend. Look at the green dots, green dots, green dots, green dots, green dots, right there. It's so simple. The hard part is that stuff between your ears and your heart. I'm serious. The hard part of trading is what's between your ears and your heart. And you start looking for things in a chart that's not there. You start looking for ghosts. You start making up ghosts. And there's the answer right there. The trend. Trade within the trend. That's a hot chart. I love it when people say, well, this chart's already gone up too much. It's not going to go up anymore. The talking heads of America on all the news stations were saying here, how can this thing be going up? Because there's no valuation to it. There's no good fundamentals. If you're a chart trader, you're not trading fundamentals anyway. You're trading the chart. Trading the chart. So we're looking for trend. We're looking for trend to extend. And we have an absolute way to enter. Very, very simple. So what we want to do. Oh, and for those that's looking for a short, and then I'm going to close it out here. For those looking for a short, we'll go look at Holex for short. Let me type that in, HOLX. There we go. There's your trend right there. Here, let's go look at it. There's your trend right there. So it long, short, it's all the same. Look at that. Be long, be choppy, be long, be short, be long, be short. You can see where you might have entered that. Is there an entry now? Let's go look. It's still trending down. We want to be involved with a trend. This is a bearish H pattern. I think right now I would have to have a little rise, but it's in a bearish 3-8 trap right now. Right in here. And here's how I find it. Right there. Find it, prove it, trade it. It's that simple. Find it, prove it, trade it. Make this stay on top. Let's just look at the SPY. It's just a chart. First of all, find it, prove it, trade it. That's it right there. Find it, prove it, trade it. Sherry, that's all I have. I don't know if anyone has any questions.
There are a
Here,
couple questions here.
okay, fire them away. Let me put these
All
back out
right.
of the way.
So let's see. Well, you had a few.
Well, okay.
Um,
I'll stay here as long as the questions stay here.
all right. Let me just see something. Well, this was about 20 minutes ago, I guess. Do you look at
Mhm,
candle patterns too? BB says, I see your dots are the 17 EMA.
mhm. Okay, so do I use candle patterns too? Absolutely. I love candlesticks. My number one, if we're going to talk about that area of a chart, my number one is the chart pattern. Chart patterns are made up of candlesticks, but number one for me is the chart pattern after the trend. So trend, chart pattern, then candlesticks. And yes, the Trendicator, the red dots, red and green dots, for me that is nothing more than the 17 EMA. Now let me share a little bit about that. That's my personal trading trend, and I'm sharing it with everybody. If somebody said, I want to use the 20 simple, you can do that. And I can't do it today because of time, but I can show you how to uh, turn that into the 20 and with the green and red dots if you use TC2000. There's other programs. We have the code for it. The members in the trading room have the code for it. You just have to convert your trading trend to whatever you want to use. A lot of people use a 21 exponential. A lot of people use a 20 simple. I use a 17 EMA honestly, because I want to be different. I'm not kidding about that. Next question.
Okay. And I don't know if that answered the AMD 8 EMA flat. Will that affect your decision to enter? Um, are you looking at the questions by any chance?
No, I can't see them.
Okay. So BB was just saying that was a follow-up, I think. Yeah, to looking at the patterns. And he said AMD 8 EMA flat. Will that affect your decision to enter?
No. In fact,
Okay.
there you go. Now we don't even have it. So there you don't have it. In fact, we could go
Okay.
to a naked chart and now you don't have it. What's going to affect my entry on this is price has to do the right thing now. Chart pattern is number one. And here's the chart pattern. We're up, we're making a J hook, a continuation, ABC 1, 2, 3 pattern. There's a lot of names for it. And what I'm looking for this to do is go up. I mean, in a perfect world, that's what we would like. Now, price has to prove itself to me. So right now, I'm looking at this. And the T line has no value in here for that whatsoever.
Okay.
So I just want it to be above this setup right here.
Okay.
Yep.
All right. Is the Trendicator available on TradingView?
It is because it's nothing more than a moving average. It's your trading moving average is what it is. That's the magic of it. The magic is not the moving average. The magic is I only look at charts that are drawn to this area. I miss out on other trades, that some people get. And, well, they just weren't in my circle, so I don't trade outside of my circle. And now on TradingView, can you change it to red or green dots? I don't know. But that's where, like in our trading room, as an example, we could ask somebody that uses TradingView, and I know people do, and I bet dollars to donuts they've got the code for it to write it. I know there's one for Thinkorswim, but if you can't change the red and dot, don't worry. It's just I use just the 17 exponential. That's all it is.
Okay. All right, cool. How can one tell when a stock would pull back after a breakout?
Well, that's all about price. Um, yeah, that's all. Let me see. What's NVIDIA doing? Let's look at NVIDIA. So, this is one of those things where it does take time. But take NVIDIA. Here we broke out, right? And we held, we held. This is a shooting star candle. Take it to the bank. When you see a shooting star candle, you're going to see a lower low. I can't predict where it's going to actually go at the time of the shooting star, but when you see one, that's a really good indication we're going to pull back, and that's exactly what we're doing. And from that point, from this day, there's been no reversal pattern back up. Are we starting a reversal pattern? We could be. And right now, it would have to be pretty much over about 390.40, I think. So there are some things that it just takes a little time, and we have to look at each chart a little bit on its own because there might be little differences. And that's how you just learn to see it when it happens. So there's clues there, like, price action clues.
Okay, cool.
Hmm.
Let's see. Okay, so BB wanted to know your exit strategy, 817's trap work for weekly charts.
Yes.
And Aaron wants to know what causes the dots to go from red to green and vice versa in the Trendicator.
That's magic. Come on, that's magic, dude. No, the actual mechanics of it, I don't know, but it's set up so that when price is below, it turns green, red. When price is above, it turns green. That's what turns it. After that, that becomes some techie person's problem, not my problem. Yeah.
As long as it works.
Yeah. I just know that price, when that dot turned red right there,
Mhm.
price is below it. When that dot turns green, price is above it.
Okay.
And like right here, for instance, we've been in a trend, price is below it, but the trend is still not completely broken because that white line never broke through. Doesn't mean I wouldn't get out of it. I'm just saying the trend hasn't completely broken by my overall rules.
All right. All right. I think that was it.
Fantastic.
That was awesome. Thank you so much for joining us. And
Thank you. Thanks for inviting me.
I definitely will be inviting you back again.
Thank you so much.
All right. Well, there you have it, folks. Thanks a lot.
Thank you, Sherry. Thank you, Exclusive
Okay.
Trading. Thanks for doing this. I appreciate it. Thank you, everybody that hung around. Appreciate that. Good night, you guys.
Okay. Have a good night. All right. I've got a couple of things that I can go over with you. That was Rick Sadler of Hit and Run Candlesticks. And I hope you got some good stuff out of that. And that is our day. Now you can go to tradersexclusive.com. I'm going to get those replays up. I have a couple that are going up tonight. It takes longer than you expect, but I think we have a system set up now. So this has been a presentation of tradersexclusive.com, and I'll see you guys tomorrow, bright and early. I'll have some videos for you to see and more prizes. Have a good day.